If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? Welcome to Weekend Recap on the Courtside Financial Podcast, a segment where we bring you a compilation of everything that went down throughout the week from a stories perspective. Before we get into this video, make sure you hit the like button, make sure you hit the subscribe button, and click the notification bell icon so you don't miss out on any content that's coming in the future. Effective immediately, NIO announced that they are going to reduce the price of all vehicles by $4,200 US is the conversion. This will help them compete with other brands that are doing price cuts, as well as create more demand for their product amongst potential consumers. This move is an interesting strategy aimed at obviously acquiring more customers. It'll be interesting to see how this price adjustment affects their sales and financial performance. Aside from the price cuts, NIO also made another significant announcement that they decided to end all free battery swaps for new buyers. Battery swapping has always been seen as a potential advantage for NIO, allowing customers to quickly refuel their battery by swapping out the battery at battery swapping stations in less than 5 minutes. However, it seems that NIO's reassessing the cost effectiveness of this service. A decision like this could have implications for customer satisfaction and the company's ability to differentiate itself in the market. Now let's take a moment to reflect on NIO's first quarter earnings that were reported last Friday. The company faced challenges with declining revenues and gross margins during this period. Revenues decreased by 33.5% from the previous quarter, amounting to $1.55 billion. Furthermore, NIO expressed a gross profit decline of 88.8%, resulting in a gross margin of 1.5%. Those numbers are not pretty at all. The numbers indicate that NIO's profit margins were significantly impacted, and the price cut could be a response to the challenging financial situation that they find themselves in. It'll be interesting to see how this strategy plays out and if it will actually help them gain momentum again in the market. Additionally, NIO reported a net loss of $690.1 million for the first quarter of 2023. This loss highlights the importance of finding the right balance between pricing strategies, cost management, and revenue generation. The decision to cut prices may have short-term financial implications, but it could also help NIO attract a broader customer base and potentially improve their financial performance in the long run.
Are you going to be profitable by next year?
Yes.
Okay.
I think we are confident for the group level to break even next year.
Okay. Now, what are your plans as far as you talked about volumes?
Yeah.
What are your plans on pricing? Because there's this somewhat of a price war going on in some segments, of course, of the EV market in China. What are your plans around pricing your models?
I think the short answer is that NIO always try to maintain a very stable price system. Okay, I would say actually in the last year and this year, China auto market is going through a very profound reshuffle thanks to the increasing EV penetration. So in the end, price war will lead to industry consolidation. But for NIO, I think we would like to differentiate ourselves by competitive products, innovative technologies, comprehensive power infrastructure, and a vibrant user community.
So are you planning more cuts, or you want to keep things stable, as you said?
I would say for existing models, we will keep the price very stable. And for new models, we need to follow the market very closely.
The CFO's statement about not participating in the price war was likely aimed at reassuring investors about the company's path to profitability. However, the subsequent decision to cut prices has shown the market that NIO had to reconsider their decision. As we wrap up, it's important to note that NIO's decision to join the price war could have short-term and long-term implications for NIO. While it may attract more customers and drive sales growth, it's important that they teeter the delicate balance of doing that while also managing the path to profitability. Alright, so we are following up on yesterday's story about NIO potentially partnering with Mercedes Benz to share their battery swapping technology. Now, obviously, as we discussed yesterday, there was an image circulating around Weibo. NIO's legal department actually came out last night. Didn't have a chance to follow up on that video that I posted before they responded until now. And so NIO's legal department basically came out and said that the image was forgery, it's fraudulent, it's not true. These rumors are not true at all. Ma Lin, NIO's senior director of corporate communications, also retweeted the statement from NIO's legal department. So as I said yesterday, we don't want to get too hype about this. We just want to discuss the potential opportunity, what it could mean if it was true, but obviously leaning in on the fact that all of this is pure speculation because neither Mercedes Benz nor NIO had even left a comment at that time. And the responsible thing to do is obviously to put out another video amplifying NIO's statement, amplifying NIO's voice, and sounding off and letting all the viewers know that this information is not true. But anyways, this video doesn't stop there. There is still a lot of positivity that came out of this. Chairman and CEO William Li had also said that he's had several discussions with several companies about using their battery swapping technology, which can still have the same positive implications that we discussed today, even if it's not Mercedes Benz, who is a partner. And that could very well be one of the companies who William Li has discussed with. It wouldn't be too far-fetched, as we did see him sitting down with their CEO in a conference room. Now, but anyways, NIO considers their battery as a service as something that's part of this whole as a service wave. They liken it to the cloud services around the world, such as Google's cloud platform, GCP, or Microsoft's platform, Azure, or Amazon's platform, AWS. These are all as a service models, and what does that mean? That companies are putting their big data in their data centers. That's all the cloud is. It's just putting your data in someone else's data center, whether that be Amazon's data center, AWS, GCP, which is Google's, or Microsoft, which is Azure. And the article from CNEV Post mentions that the biggest users of those services are the companies themselves. So NIO is obviously the biggest user of battery as a service. NIO also mentioned that if, these car companies are going to use their technology in the future, they have to develop into NIO standards, right? So with that being said, battery as a service, NIO's option to lease the battery on the car, imagine people being able to lease batteries for cars that are not NIO. That would open up so much more possibilities as far as revenue as well. So you kind of have to think bigger picture here, in my opinion. And I think that down the road, this could have huge positive implications, because imagine a world where a lot of these car companies are using NIO's battery swap if it becomes standardized. We know that China has chosen battery swapping as a preferred method of refueling, and who is the best in the game when it comes to that? That's obviously NIO. This could be massive opportunity for the company in the future. There's no denying that. Anybody who denies the at least potential of this is just refusing to see it.
You can see. Yeah. Okay.
This is Chinese innovation, a great leap forward from China's communist past.
What would Chairman Mao make of a capitalist like you?
Li told us Chairman Mao would have said, "You're doing a good job."
You really? He was a communist.
Okay.
He hated capitalists like you.
We're trying to make a better world, Li said.
Today we're going to look into who exactly is NIO's CEO. Who was he before people started calling NIO the Tesla of China? Well, the story starts in 1974. Well before William Li amassed a net worth of over $1.4 billion, he was born on a dairy farm in Anhui, China on August 9th, 1974. In his younger days, he went to school and worked at the same time. Eventually, it became time for him to pursue higher education, and this was possible for him because he worked and saved up money, and his family also worked and saved up money for him to be able to attend Peking University in Beijing, China. Peking is one of the most renowned universities in China. It's part of the Elite C9, so for comparison purposes, think of it as the Ivy League schools in America. So getting into Peking was definitely no small feat. There at Peking University, Li attained a bachelor's in sociology and a minor in law. It wasn't too long after graduating that Lee had begun to see some success in business. I mean, over the course of his entire career, he's co-founded and invested in 40 different companies. One of the most notable companies on his journey was BitAuto. This was a company that Lee founded, and at the same time, he served as CEO and chairman for the first time ever in his career. Lee founded BitAuto in the year 2000. BitAuto to this day is still a leading provider of internet content, marketing services, and transaction services for the auto industry in China. It even trades on the New York Stock Exchange with its ticker symbol being BITA. However, in 2013, after working in the company for many years and gaining priceless business experience, William Lee decided to sell the company after bringing it to over a $1 billion valuation. Cashing out on BitAuto was not enough for the ambitious entrepreneur. He was always thinking bigger. A year later, in 2014, this is when he founded NIO, the electric luxury vehicle maker that we know today, which is actually what we like to think about as a lifestyle company. Anyways, like I always say on this channel, automotive is capital intensive. This business requires a lot of capital. So where was Lee going to get the capital to fund this business? As you can imagine, NIO struggled in its early days, but with Lee being the ambitious entrepreneur that he is, he was able to secure some funding from Tencent, Baidu, and Lenovo, among other tech giants. By 2016, the company had raised over $1 billion from investors. Towards the end of 2016, NIO had launched its two-door sports car, the EP9, which is actually one of the fastest electric vehicles in the world. It can do 0 to 60 in 2.7 seconds.
It's just insanity! They say it'll do 0 to 60 in 2.7 seconds. 0 to 125 in 7 seconds. 7 seconds!
During this year, the company also got its permit for autonomous vehicle testing to pursue level 4 autonomous driving. This was always something that was important to the company, even back in 2016, and now we know that they have a partnership with Intel's Mobileye to pursue autonomous level 4 driving and also pursue their robo-taxi network. So obviously the years went on and the rest is history. Now NIO is having its best year ever as a company. Obviously they still have a lot to accomplish and a lot of hurdles to overcome. I like to invest in people and I think he's a great CEO. Like I said, the automotive industry is capital intensive, so you need someone at the helm of your company who can secure funding with the snap of a finger. Just look at how Elon Musk is always able to raise funding when he needs to. If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord.
I've been a car fanatic since before I could walk. Any good car already encompasses the story. Spending all of this time looking at a car through the viewfinder and later in Photoshop, you really come to appreciate how much thought goes into great car design.
Okay, so NIO has recently released their ET5 Touring, which is going to be the station wagon version of the ET5. Now, I believe that this is a 50-50 bet, just taking a look at the market in China for station wagon. But anyways, before we get into more specifics, let's set the stage and really understand the landscape of the market in China. As we know, the domestic market for station wagons in China is sparse. Chinese consumers have shown a clear preference for large SUVs, vehicles that provide ample space for both passengers and cargo. Due to this strong preference, brands have been reluctant to produce station wagons in China. There's low demand and obviously high production costs, because the game of automobiles is a game that is won at scale. However, despite the limited interest from these brands, there still is potential opportunity for a company like NIO to fill this gap in the market. No other brands have taken the lead in the station wagon segment, and that brings us to an interesting development from 2 years ago, when a company called Baojun made an ambitious move with the introduction of their station wagon called Valley. That's right, Baojun's Valley was an attempt to tap into the station wagon market, but its success was overshadowed by certain factors. It faced challenges in gaining significant market traction, possibly due to consumer preference for SUVs and the associated perception of station wagons as being expensive. But now, NIO, the electric vehicle manufacturer, has stepped into the ring. NIO has gained widespread recognition for their advanced battery technology, cutting-edge design, and exceptional user experience. By entering the station wagon market, NIO aims to capture a new segment of consumers who desire the practicality and versatility offered by this type of vehicle. It's a bold move indeed. The introduction of the ET5 Touring, NIO's station wagon offering, represents a 50-50 bet on a niche market. NIO understands the challenges and risk involved, but they also see an opportunity to cater to a select group of consumers who crave the unique attributes of a station wagon. This move by NIO indicates their commitment to diversifying their product lineup and expanding their reach beyond the popular SUV market. They're recognizing the need to provide options for consumers with different preferences and lifestyles. And let's not forget that NIO has always been at the forefront of innovation. From their advanced battery swapping technology to their comprehensive charging network, NIO has shown time and time again that they understand the evolving needs of their customer base. This foray into station wagons is yet another testament to their ability to identify emerging trends and adapt accordingly. At least I hope so. It'll be fascinating to see how NIO positions the ET5 Touring in the market and how consumers respond to this unconventional choice. Will NIO be able to create a new demand for station wagons in China, or will they face the same challenges as Baojun's Valley? These are questions that'll shape the narrative moving forward. Only time will tell if NIO's bet on the ET5 Touring will pay off, but one thing's for certain, NIO is not afraid to take risk and push the boundaries of what's possible in the automotive industry. NIO's always been a company that thinks differently, and it's the kind of mindset that has propelled them to their current standing as a major player in the electric vehicle market. And I also wanted to share an interesting statistic regarding the station wagon market in China. According to a report from 2018, station wagon sales were on the decline, comprising only 9% of the overall automotive market in China at that time. That's an important point to consider. It highlights the challenges faced by station wagons in a market dominated by SUVs. However, it also underscores the potential for growth and market expansion if a brand can successfully tap into this segment. NIO's decision to enter the station wagon market with the ET5 Touring is a strategic move that aims to capture a niche market and potentially revitalize the interest in station wagons. Before we wrap up, let's touch on an interesting aspect of NIO's strategy that relates to the pricing of their station wagon offering. As many of you know, NIO has introduced a unique battery as a service model which allows customers to separate the cost of the battery from the purchase price of the vehicle. This battery as a service model provides flexibility and cost savings for NIO customers. To give you an idea of the pricing structure, let's take a look at the battery pack options for the ET5 Touring. The purchase price for a 75 kilowatt hour battery pack is 298,000 yuan, while a 100 kilowatt hour battery pack is priced at 356,000 yuan. Now here's where it gets interesting. With battery as a service, the price of the ET5 Touring after factoring in battery as a service is 228,000 yuan, regardless of whether you choose the 75 kilowatt hour or the 100 kilowatt hour battery pack. In addition to the purchase price, customer pays a monthly battery pack fee, which amounts to 980 yuan for the 75 kilowatt hour battery pack and 1,680 yuan for the 100 kilowatt hour battery pack. What's remarkable about this pricing structure is that it aligns with the cost of the ET5 Touring with NIO's other offerings. Despite being a station wagon, the ET5 Touring is priced at the same level as the original ET5 sedan thanks to the battery as a service model. This makes the ET5 Touring an attractive option for customers who desire the space and utility of a station wagon without compromising on price or not wanting to move up to an SUV. NIO's approach to the pricing with the battery as a service model demonstrates their commitment to providing value and affordability to their customers. By separating the battery costs and offering a flexible payment structure, NIO is removing a significant barrier to entry and making electric vehicles more accessible to a wider audience once again. This innovative pricing structure combined with NIO's renowned battery technology range and charging infrastructure further strengthen the appeal of the ET5 Touring and positions NIO as a frontrunner in the station wagon market. That's going to be it for this episode of Week in Recap for the Courtside Financial Podcast. If you found any of this information valuable, make sure you hit the like button, make sure you hit the subscribe button, and definitely leave a comment down below. Genuinely interested in hearing what you guys think about these new this new style of videos that we're doing. Anyways, that's going to be it. I'll catch you guys next time.